Well, Andrea Williams is the head of European equities at Royal London Asset Management, and she joins me now. Thank you very much indeed for joining us today. Before we start looking at specific stocks, just generally talk me through your strategy at the moment for stock picking.
Well, overall, we're quite positive on the market still. We can still see upside in the market based on the earnings growth that we're seeing and based on a forward price earnings ratio of sort of 12-13 times. So that's our starting point. We're quite nervous about Southern Europe, particularly Spain, less so Italy now. I think the reforms there are having an effect. So we're tending to focus on Northern Europe and also emerging markets to get our exposure, because a lot of European companies have good representation in emerging markets, of course. And we're also seeing better conditions in the US as the sort of housing market begins to recover and unemployment comes down a bit. So we're trying to play the US market as well. So that's our sort of starting point.
Okay. And let's look at some of the specific sectors, because oil services is something that interests you, isn't it?
Oil services does interest us. I mean, all the majors have now reported, and most of them have said they are struggling to find oil, they're struggling to replace oil, so they're all raising their capex budgets quite significantly, 20-25% in the case of Shell. So we're playing the oil services, people like Seadrill, the drilling company, people like Fugro, which is a Dutch company that has seismic exposure, and Subsea 7, a Norwegian company, all that are participating in the deep water offshore growth as those oil companies struggle to find oil.
Right. Now, also another area is the growth in agriculture and the need, in fact, to make the limited agricultural resources that we have work better.
Yeah. I mean, the population is growing. The yield has to be improved. So the agrochemical stocks such as Syngenta, the Swiss company that has the crop protection business and also the seeds business, various traits that it's introduced to genetically modified crops, etc. But also things like Bayer and BASF, the two German chemical companies that have crop protection within their businesses as well as other attractive businesses as well. So that's an area that we like.
And so that's obviously a way to invest in German stocks, but that actually have a lot of exposure to the emerging markets.
Emerging markets, and also exports, so benefiting from the weak euro. And BASF has restructured its portfolio a lot. It now has 60% of its portfolio in market positions where it's the top three, and therefore it has a lot of pricing power, both in crop protection and general chemicals, but also catalytic converters, things such as that. And it generates a lot of cash flow, gives you a 4% dividend yield, which is well covered, and also can do share buybacks.
Now, in terms of healthcare, it's I know it's a sector that is interesting quite a lot of investors at the moment, but how do you go about choosing the correct companies when it comes to healthcare?
Yeah, I mean, we have the big four pharma companies, but we are very keen on Novo Nordisk because of its diabetes strength. I mean, diabetes is a growing problem, unfortunately, as people adopt to the Western diet in emerging markets again. Diabetes is increasing in regularity, and they have a very strong franchise there across the broad spectrum of products. But we also have other products, other companies such as Sanofi and Novartis, but we also focus on some of the smaller companies like Grifols, which is a Spanish company that is involved in plasma production, and Fresenius, again, another German company that is participating in the dialysis clinic growth in the US market.
Right. Now, when you look at financials, it is a tricky area at the moment, and some people just tend to want to shy away from it completely. How do you work out where to invest? And financials and insurers, what do you favour?
Well, it's still a sort of 18-20% of the market, so we have to have a view running the type of money that we do. All through last year, we were tending to favour insurers over banks because we feared about the whole sovereign exposure at banks, the requirement for capital, the fact that their provisions were having to go up in many areas. Within banks, we do own some, so we've always favoured the Scandinavian banks such as DNB Nor that we've spoken about before, and Svenska Handelsbanken, which is the leading bank in Sweden. Their economies are still growing, they're still getting good pricing momentum, and they still have very strong capital ratios, and they also pay a cash dividend. And when you're running an income fund, that's important because a lot of the banks have gone to scrip dividend or have actually cut their dividend completely. So we've tended to focus in the north. We do have some Spanish banking exposure, but it's fairly low. I'm still concerned about the deleveraging that the consumer has to do in that economy, the poor outlook for the small, medium-sized companies, and the fact that provisions will still have to go up. I know they have Latin American exposure, but they still have a lot of problems in Spain to cope with.
Indeed, indeed. Okay, Andrea Williams, thank you very much for coming back in to talk to us. We really appreciate it here on The Last Word. Thank you very much.